Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, boy, oh boy, do we have some news. We're going to be talking about SoFi, Amazon, Nvidia, other banking related things, Microsoft, a little bit more Amazon, Apple, Google. It's going to be fun. Let's jump in. How's everybody doing today? Investing for freedom, how you doing? Once again, never late is true. Thank you, Saul, for noticing. BMNR, we need to gear it. We got to hear. Oh, I see. We got to hear it. Yeah, BMNR. Getting absolutely punched into the ground right now. The good thing about this company, although it is getting beat down on a gains perspective, is what is the risk of actual bankruptcy or something like this? Like, are the fundamentals of the business going in the wrong direction? No, right? They continue to buy up more Ethereum. They did so again this week, ending up increasing their cash position, buying more Ethereum, about 82,000 more Ethereum again, which is only leading them to get closer to their 5% alchemy of BTC. Or sorry, of ETH. Sorry, not BTC. Here I am, a freaking MicroStrategy fan these days, eh? But let's jump into that. Why don't we? We'll go to BMNR first. BMNR announces ETH holdings reached 3.5 million tokens and total crypto and cash holdings of 13.7 billion. This was updated this morning. Okay. That includes, by the way, in their total holdings, 62, where is the stat? $62 million of 8Co holdings, 192 Bitcoin, and $389 million of cash. Cash actually went up about $80 million week over week. And they also had acquired about 80-something thousand more ETH. Let's go ahead and find that really quick. 82,353 ETH tokens over the past week. Okay. They're at 2.8% of the supply, more than halfway towards their initial pursuit of the alchemy of 5%. You like how he says the initial pursuit? Not towards the pursuit, towards their initial goal of 5%. Well, what's the new goal? What's the current goal, if not the initial one? That'll be interesting. Okay. Let's see what else we have here. Let me read this Tom Lee thing, and then, although I don't think it actually ended up giving us any new detail. In the aftermath of crypto's largest ever single-day deleveraging event on October 10th, crypto trading volumes are still recovering, which also affected crypto equities. The fourth quarter is seasonally strong for crypto and equity prices, and historically encourages investors to increase open interest, and therefore associated trading volumes should improve in coming weeks. Bitmine continues to attract institutional investor capital as our high liquidity is appealing. The combined trading volume share of Bitmine and MSTR is now 88% of all global DAT trading volume. We continue to lead our crypto treasury peers by both the velocity of raising crypto NAV per share and by the trading liquidity of our stock, says Thomas Lee. ETH is holding BMNR down. Well, I guess they're exactly 1-to-1 tied, right? Like, well, they don't have to be 1-to-1 tied in the exact same period, but they're always going to be range bound around each other. So as long as they continue to hold and buy more, that should, whenever ETH turns around and actually goes above 4,000, above 4,500, for example, bring up BMNR share price. Okay. All cryptocurrencies are moving down. Yes, but the actual activity on those chains is not, right? Ethereum continues to grow. Stablecoin percentages continue to grow. Eventually that will be driven, fundamentally where the activity actually continues to, pay more gas fees to Ethereum, and then that ends up burning more ETH. But yeah, it's always been a speculative asset, right? We've had crypto winters. We've had times where Ethereum ends up pumping a ton in a single year or even a couple months. And then we've had times where it's been very, very slow, right? The hope is that we potentially see some activity over the next 2 months. That would be great. By end of year, those end of year targets that Tom Lee is seeing. Crypto historically does very well into the end of the year, but we'll see. When's the Hood prediction party? That's at 9:30 tonight. 9:30 tonight, we're doing Hood predictions. Wednesday, we are doing the actual call, which will be quite interesting. As always, we are on the earnings call. Okay, so I'll be dialing in and asking Vlad and Jason a question. What should I ask them? By the way, is there something that needs to be asked? I have some ideas of what I want to ask, but I don't have something like super concrete. And don't say when dividend or something like this. Okay. Have I talked about the Sam Altman interview? I haven't on a live stream. I've got a video coming out either tonight or tomorrow morning on Nvidia and everything that's transpired over the weekend, including that Sam Altman interview. We can definitely talk about it on the live stream, but overall, I think what he said is not as bad as what people are making it out online. I don't think Sam Altman nearly sees as much constructive criticism with the work that he does. I'm sure his position is extremely hard. You know, he comes off a little weird, but he's also told that by every single person on the internet how, much he is like Lex Luthor or an evil person or something like this. And I couldn't imagine if he honestly does have good intentions, how annoying that must be for the whole world to be against him, especially because, one of the people that definitely doesn't like him, Elon Musk, obviously has quite the following. So that hasn't, been the best. Mustache looks better. I trimmed it back for November 1st, so it would grow back for the Movember month. Aura Farmer says, "Let me be a mod, bro. That would give you too much aura, my friend. You need to work for it." This is obviously the names got changed around, but I don't even recognize your name in this chat. Hi, June. Yeah, all the names got mixed around now. We're back to we're back to having ats now instead of the actual names that you guys chose. Why do you guys love Grab so much? I'm not a fan of Grab. I don't hold any Grab. I'm not a holder. Okay. But I am a holder of Nvidia and SoFi and a bunch of Amazon, Google, and we got a lot of news to cover. So let me cover some ground here because we're already 8 minutes in. Jeez, it flies on these freaking live streams. Loop Capital sees big upside for Nvidia. Loop Capital raised its Nvidia price to $350 from $250, implying a 73% upside while keeping a buy rating. Okay. They also said that Nvidia is leading a new golden wave of artificial intelligence demand, but warned of risks from power limits, real estate, and regulation. He believes Nvidia will remain strong through the Blackwell chip cycle with a $400 possible long-term target. Guys, a $400 target is a $10 trillion market cap. Yes. Yes. Now, one individual, hoping for this to happen, or one team hoping for this to happen, doesn't mean that it's going to come true. But I've been saying since 2022 that I think they're going to be the first $10 trillion business. Everyone called me sick and deranged and crazy, but it doesn't seem so crazy anymore. We're seeing deals come through worldwide. Okay. Microsoft and Nvidia are now expanding their partnership to bring Nvidia chips to UAE to set up data centers and cloud capacity in the United Arab Emirates. About $8 billion expansion from Microsoft there, and they continue to build out. But some of the reasons why they are needing a lot of those build outs is just the sheer amount of demand. Now, I'm going to show you guys one large customer. I'll show you guys another customer here in a second, but OpenAI, like the interview that we were just talking about earlier, is, I mean, like, they're going around town getting deals from every single company that'll deal with them, right? $500 billion deal for the Stargate project, signed $100 billion deal with Nvidia. Nvidia also has a chance to buy up to $100 billion of their equity. $100 billion of AMD deal, quite the opposite. They're actually going to get AMD shares for that. Today, they signed a $38 billion Amazon deal, $25 billion Intel deal, $20 billion TSMC deal. Signed a $13 billion Microsoft deal with an additional $257 billion of Azure capacity that will be purchased throughout their deal as well. $10 billion from the Oracle deal. Signed a multi-billion dollar Broadcom deal. This is quite insane. Now, some people are starting to say, hey, these deals aren't actually going to come through. This is all, posturing from Sam Altman. This company is going to go bankrupt, yada, 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 yada. But then we end up seeing Anthropic end up doing a massive 350,000 employee deal with Cognizant to end up offering them their AI products, Claude and such, to all of the employees at Cognizant. And as well, they are going to sell Anthropic's products to all of their customers. So you're seeing a broad-based expansion in artificial intelligence. It's not one company. It's not just Nvidia. It's not just OpenAI. This is across all semiconductor manufacturers. This is across all artificial intelligence names, hyperscale cloud providers, neoclouds, both IREN, Cypher, ended up doing multi-billion dollar deals today. $5.5 billion for Cypher for over 15 years. And I think it was an $8.9 billion deal for IREN over 5 years for Microsoft. Both of which, by the way, tied to NVIDIA chips as well. Then, of course, we have the trade deals or the softening tensions between China and the United States, where U.S. semiconductor manufacturers will be able to sell into Chinese markets. Jensen Huang's very excited about this. We'll have to see how that actually goes, right? We went from essentially 95% of the market share of the Chinese market down to zero. Well, it's continued to grow at a 50+% rate. So that was a big hit. So now forward guidance does not include Chinese sales. If they start to re-enter that market, that could be such an immediate gain to their overall revenue. But we'll have to see. 9.7 billion. All right, sounds good. Thank you. What an effing sell-off by Palantir, dog. Here's the thing, okay? Well, I agree with you. There's no denying that this was a large response to the best quarter that they've ever seen. This is the risk that people take whenever you're buying a company that is the most expensive name in markets. Okay? In capital market history, I don't remember a company this expensive. And I don't mean by market cap, I mean by multiple. Okay? So you can have unbelievable earnings and people still take profits, because what are you going to do? You're just going to endlessly continue to expand that market share or that market cap forever and ever and ever? Well, I mean, you can expand market cap. I shouldn't have said that. Expand the multiple. You cannot expand multiples forever and ever and ever. That's the elastic band that companies have to deal with. Okay. So if you consider, let's say a 1 times peg on a company, or a 1 times multiple for earnings on a company as being the starting point, the first finger for this elastic band, anytime that the multiple goes away from that, it's stretching that elastic band. Okay. And so whenever you have a company that's undersold, and getting much, much cheaper, you're actually starting to push that elastic band down and actually expecting that if they do beat earnings or does something that expands expectations, that elastic band will get let go, shot right through the moon. Okay. Palantir has by far, do I not have a single mod? B-dubs. Get that guy out of here. Do your job. Okay. But Palantir is essentially stretching that elastic band as hard as anyone has ever stretched it before. So you can have, great earnings, the best earnings we've ever seen, and there still be some concerns about valuation. All right. That's the only problem here. Aside from that, I mean, the quarter was insane. It looked so amazing. I've got nothing bad to say about it. No one can say anything bad about Palantir. It's only valuation. That's the only thing. Alex Karp's done everything right. He was right. The haters lost. The short sellers will cry, and he will have won. Okay. Let's get back into the SoFi news. So for SoFi, this is what we're going to constantly see. This has been a nice little update from the company. They're not promoting a single product here. They're promoting the use of multiple products together via SoFi Plus. Double down on smart money moves when you combine SoFi Plus and SoFi Invest. Well, the only way to do SoFi Plus, I mean, you can pay, the $10 a month or whatever, or you get it absolutely for free for signing up with direct deposit. So if you end up bringing in direct deposit, not only do you get, the high APYs, but you get double the reward bonus for joining SoFi Invest. 1% match on recurring deposits. Unlimited one-on-one financial planning. Preferred IPO access for companies like Navan. However, that would have been a terrible one. They've done pretty poorly. So I think you're going to see this more often. I think 2026 is going to be the expansion away from just SoFi money in SoFi Invest. You're already seeing this with the smart card. They're essentially highlighting very much an Amex style partnership with the smart card and SoFi Plus, giving you the best APY, the best credit card benefits, credit building potential, extra borrowing potential, these sort of things. So then they're going to tie in SoFi money with the credit card. But the checking accounts also, or the brokerage is also very good here. When are they going to start bringing in other products that also work very well with SoFi Plus? And so if you're working with SoFi, why work with anyone else? Speaking of working with anyone else, Chime, ladies and gentlemen, this company, and I'll tell you guys what I did, and then the reason why I'm bringing it up right now during a SoFi conversation, because we're going to talk about both here in a second. Chime ended up dipping to the lowest price we've ever seen as a public company today, $16.17. I did not end up seeing it whenever it went to $16.17. I saw it whenever it went to $16.50. So I bought a big chunk of shares, deepened my position in Chime, and then we rose back up. If it continues to dip, even in the $17 range, I am a big buyer. Okay. 16 is just ridiculous. Like, people are disregarding the multiple that we're supposed to be putting on companies for their potential growth. This guy says, F Wealth Simple can't even do covered calls. Yes, you can. And not only can you do them, they're free. I do covered calls all the time on Wealth Simple. But you need 100 shares, my friend. Okay, let's go into the next thing, though. The reason why I brought up Chime and SoFi, the exact same thing, was this new report that ended up coming out that I missed. I did not see it at the time that it was reported, but it still, lends itself to very constructive data here. Not for SoFi as much because we've already seen Q3, but still, I want to point to you guys how well things are going. But for Chime, we have not seen Q3 yet. So now let's have a look at this report because boy, oh boy, does it spell something that's completely different than what we're seeing from market reactions. Financial services churn data and analytic reports for October of 2025. We're going to go through checking accounts, invest accounts, saving accounts to see who are the top 10 players in this industry based on hundreds of thousands of surveys in the United States. See who's winning. Sorry. No. 4,000. Sorry. No. I read the wrong thing. They said that they did 100,000 surveys or whatever. My bad. 4,000. It literally says it right there. However, why does that look grayed out? It literally looks better like this. Share of checking account openings. They saw the highest number of checking account openings in the last 90 days for Chime at 13% of new account openings was Chime. Then Chase, Wells Fargo, Bank of America, Capital One, tied with Capital One, SoFi. Okay? The pretty freaking high. All the way down near the bottom, TD, Cash App, and US Bank. Now, Chime is at 13%. That's essentially the equivalent of SoFi and, somewhere between Chase and Bank of America. Okay? In terms of share of new opened accounts. Checking account conversion rate. The checking account conversion rate, by the way, shows the percentage of times a bank was selected by a consumer seriously considering the bank for a new checking account. A higher conversion rate suggests the bank is more effective at turning consideration into action. Chime was the highest at 77%, SoFi 75%, and then no one else is even close. The next 56, 56, 55, and then all the way down you have the big banks, Chase, Bank of America, Wells Fargo, 40 plus percents, Chime and SoFi, top two. Okay. Checking account win rate. Look at this. Win rate shows the percentage of times a bank was the winner when consumers opened a new checking account, compared to all situations where the bank was in play, whether as the new bank or the previous bank being closed or the bank that was left open when the consumer opened elsewhere. A higher win rate suggests stronger acquisition appeal and retention performance. Look at this. SoFi, 63%, the highest on the list. Chime, 53%. TD Bank actually being surprisingly high up here with Bank of America being so much lower. I'm surprised that. Oh, and also Cash App. Damn, Cash App's so bad. But for real, though, this is why I have not held Cash App and Block, is because they have not been able to grow the amount of users on their platform for 6 quarters in a row. I don't mess with it. I don't like it. We're fundamentally driven on this channel. If I see companies starting to, not show high performance, we leave them in the dust. And I would do the same if SoFi started to underperform, but it's just not what we're seeing. They're at the top of the list for every single one of these products. Okay. Checking account switching flow. Oh my gosh, I didn't even read this, dude. That is exactly. Never mind. I got overly excited. What's going on? What is this? Okay. Cash App users are going to Chime. Chime is going to SoFi. So that's why I got super excited. I saw that. I needed to read a little bit lower. SoFi went to Chime. Who the heck is going from SoFi to Chime? I want to know that. What kind of disgusting activity drives you to want less cash back on your cards, less APY, like, what is it a secured card? I mean, that actually, if you go to sign up for an account through SoFi and you don't, you're not accepted to get a credit card through SoFi, then they tell you, hey, you should try the secured card at Chime. Chime ends up paying them a referral fee for this. So maybe this could be some level of people switching from SoFi to Chime, but a little bit of it is actually a paid funnel. Maybe. Who knows? Isn't Chime for lower credit consumers? Yeah, but all the lower credit products you still get at oh, sorry, I saw a stupid comment. All the products you still get at SoFi. So if they did open up teen accounts, the ability to have joint accounts and personal accounts, they said that they're working on that. And then secured cards, I literally don't know who SoFi would lose customers to. Now this is where the most amount of new account openings are happening. But does that mean that, who is the large change of hands? Like maybe 95% of the customers that are moving from Chime to SoFi are going that way, where only 5% are going from SoFi to Chime. So I don't know the weighting here, who knows? And it doesn't look like it just looks like it's in alphabetical order. So, yeah. Okay. Saving accounts. The result collected from 2,789 customer surveys conducted between, the last 90 days, the share of saving accounts is heavily in favor of Chase, Bank of America, Chime, Wells Fargo, Capital One, SoFi only at 3%. Okay. The share of account openings shows the share of total accounts opened by a bank in the United States. The top 10 that are captured in the largest share of new account openings during the measurement period are shown. A higher share of account opening means that the bank is winning more new customers relative to the market. However, saving rate conversion rate, 86%, was in Chime's favor. SoFi, only 62%, a little bit lower. And a higher conversion rate suggests that the bank is more effective at turning consideration into action for saving accounts. However, the win rate, how funny is this? Heavily in favor of SoFi. Now, this is where it gets really interesting. Okay. Any of you guys Hood fans? Any Hood people in chat? We get a lot of negative talk about SoFi from an investing account perspective, how many like brokerages are actually opened here. Let's take a look. Share of investment account openings. Fidelity, 13%. Schwab, 9%. SoFi, 6%. Hood, beating them out, 7%. I mean, that's fair. They're much bigger. Acorns, 3%. Edward Jones, 2%. US Bank, 2%. However, an investment account conversion rate, SoFi takes 80% at the very top, suggesting high consideration into action. And that proves itself true through the win rate. SoFi at the very top of investment account win rate, 77%. Acorns, 70%. Isn't that crazy? Isn't that nuts? This is for Q3 specifically. Q3 specifically. So we're about to see Hood's numbers. And B-Dubs is right. SoFi's conversion rate across all segments is insane. And that's the end of the list. We saw checking accounts, savings accounts, and investment accounts. Chime doesn't play in the investment accounts, so they're not very high there. But I bet a lot of you guys are surprised, or at least I would be surprised, by how high Chime was on a lot of these charts. Okay. the stock continues to fall. Well, the other companies, the other fintechs that are doing well are given, massive benefits to their stock price, to SoFi, to Robinhood, even Cash App to some degree is getting more of a bid than Chime is getting right now. Like, it's just a little bit gross. So I'm buying Chime, not because I think that they're the end all be all for fintechs, but because I want it to do well, I want the I want to believe that the stock is going to do well relative. Sorry, I was trying to read, chat, and talk at the same time. I should never do that again. Tanner, I believe Hood Members is going to continue to struggle as most of the 2020 and 2021 meme craze accounts are taken off the platform by law. There is some escheatment, which is true. That has happened, but I don't really care about that. I care about more total account growth, or like total revenue growth. If average revenue per user doubles while member counts stay flat, I'm not going to worry about it. But also, they need to tell us that escheatment is what's actually happening. They did last time, and it did happen. I think like 170,000 accounts, something like this. SoFi to 60. It seems to be the new price target from Tim Sweeney, eh? Investment accounts make much less revenue than trading, with all the respect. If you're comparing SoFi to Hood in terms of the average revenue per user, I am not disputing that at all. It's not even remotely close. I think like SoFi makes like $8 or $9 per invest account, where, Hood's probably north of 150 for Q3. I'm not suggesting that they're even the same. But whenever crypto comes back, L1 options, these sort of things, it can begin to climb, and it's all about the cross sell. It's about what the user is in total. If, Hood is just looked at as investment accounts versus SoFi of a lending account, a checking account, an invest account, and that's it. Well, then you can look at them a little bit more equally. But also, I'm a super fan of Hood. Historically, the results of Hood have done better than SoFi. But also, you have to pay 3 times more to get that stock than you do SoFi. So my question is it 3 times better? Is Hood doing 3 times better than SoFi? Okay. I'm up a lot on my losses for BMNR. That's the weirdest way. I'm up a ton on my losses. So you're down a lot. I get it. What's the deal with Amazon? I'm glad you asked. Amazon ended up signing a deal, a $38 billion deal for OpenAI. If you guys remember throughout the call, Andy Jassy had suggested that their remaining performance obligation was not inclusive of unannounced deals that are going to be seen into the future. And then, a week later or a few days later, we ended up seeing an OpenAI deal with AWS after they signed their new amended agreement with Microsoft, saying that they don't have to be, right of first refusal for future compute. So now we're seeing an AWS deal, and people had wrote off Amazon so quickly. And I think people are writing off Meta right now as well. And I just think, honestly, there's so much money to be made in the big tech names. They're so cheap. There's so much growth. You're making tens of billions of dollars a quarter, and the stock price can fall on bad sentiment about what the CEO said on the earnings call, or that people are speculating whether or not, Andy Jassy sounded confident or Mark Zuckerberg sounded annoyed on the call. It's like people are not paying attention to the accelerating revenue and then the increase in margins after spending, 20 plus billion dollars to buy more data centers for future growth. Yeah, I don't know. Geez, where's the bottom for Meta? Who knows? Who knows? I won't be able to time that. What I will promise you guys is that whenever it starts to return, I'll have shares lower than, where we were before the earnings call. And that's just me taking advantage of the dip. We'll see new highs on Meta. I feel, well, I can't promise anything, but I feel confident in that for my own portfolio because they continue to grow. That's what growing companies do. They get to new highs. I typically don't care about inclusivity. However, I'm highly interested in SoFi's S&P 500 inclusivity. Well, time to be more inclusive because, yes, we do want SoFi to enter the S&P 500. Doesn't Microsoft own 27% of OpenAI? You are correct. Yep. But there's nothing wrong with that. Nvidia is going to own a share of OpenAI as well. Meta will split within the next year. Maybe, but that'll only be a benefit. That's usually seen quite positive from investors, being able to write, more covered calls and such with their shares. Sam Altman is shook. We can watch that video if you want. I don't find it. Do you guys know the one that they're talking about? Has anyone not seen it in chat? We can definitely watch it. Let's see. Okay. It's quite an interesting video.
Hanging over the market is how can the company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just enough. People are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself, including myself.
People who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly.
I would absolutely buy it. By the way, I said it at 300 billion. I say it again at 500 billion. I'd probably say it again at 1 trillion. I would absolutely buy OpenAI.
Do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So, there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. But I we carefully plan. We understand where the technology, where the capability is going to go, and how the products we can build around that and the revenue we can generate. We might screw it up. Like, this is the bet that we're making, and we're taking a risk along with that.
I was getting into my food there. But it is quite interesting, isn't it? That was not the longer clip. There's a longer clip that I wanted to show you because Satya Nadella chimes in to give his thoughts. And I think that that's an important addition because he also says, here, let me see if I can find it. Because he also talks about how Sam Altman, although he's quite forward-looking,
Want to be a public company, but
he's never missed his goals. So let's go ahead and finish this really quick because there's an additional commentary that I wanted you to hear.
It's ridiculous. OpenAI is about to go out of business, and whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. But we carefully plan. We understand where the technology, where the capability is going to go, and how the products we can build around that and the revenue we can generate. We might screw it up. Like, this is the bet that we're making, and we're taking a risk along with that. A certain risk is if we don't have the compute, we will not be able to generate the revenue or make the models at this kind of scale.
Exactly. And
let me just say one thing, Brad, as both a partner and an investor. There is not been a single business plan that I've seen from OpenAI that they're put in and not beaten it. So in some sense, this is the one place where, in terms of their growth and just even the business, it's been unbelievable execution, quite frankly. I mean, obviously, OpenAI, everyone talks about all the success and the usage and what have you. But even, I'd say all up, the business execution has been just pretty unbelievable.
So that's why I said at the beginning of the video that, it must be hard running this public of a company. The whole world is watching. You are passing your goals by, the huge margins. Every single business owner, half the people that are critiquing you are also wanting your shares. Brad Gerstner's concerned that a company making 13 billion, maybe they're making way more than that, is, looking for 1.4, which is actually now closer to 1.5 trillion dollars of forward compute commitments. How are you going to afford this? You're a startup. And yet he wants more shares. People believe in Sam Altman, but they also are still so skeptical. I can understand that being a hard position to be in. Well, as far as I could see, it would be hard. Like, can you imagine his insight into what artificial intelligence projects they're working in or working towards? Like, just imagine. We didn't know about Atlas before Atlas became Atlas. We didn't know about Codex. We didn't know about Sora. We didn't know about any of these things before they came through a live stream for them. What are the 20 other projects, 50 other things on their roadmap into the future that they want to build with artificial intelligence? And they're going, hey, if we ask for compute whenever we actually need it, it's going to cost 10 times more. We're going to, have to sit in line with the rest of our competitors who might actually get there first. Why would we ever bother doing this? Why don't we go and make large commitments? Say, we're going to pay you regardless. But we want to make sure that, these companies serve us first whenever we need them to. That's also the other thing with a lot of these, $1.5 trillion of compute into the future is like, there's no years, there's no timeline on these. They always say like undisclosed amount of time for the Nvidia deal, AMD deal, Broadcom deal, Oracle deal. Great. you know. What stock in your portfolio is the most stressful? It feels like BMNR right now. I mean, it's the one that came to mind first. Airbnb has been quite stressful. Yeah. One of those two. Okay. I mean, BMNR is just stressful because, one, I'm very public about that name. There's no underlying business, so they just are acquiring those shares, and the shares are, there's not a lot of transparency on it, on how many shares are outstanding or what the capital raises are looking like, or there might be a lot of institutional activity, but I don't know if the institutions are bending them over and getting, extremely preferred pricing. So we really don't know. So yeah, that part is stressful. But overall, I'm a big believer in Ethereum. Okay. Do we want to read about Cash App really quick? I'm no fan of Cash App, but I did like this. And every single company is going in this direction. This is sort of the Cash App version of SoFi Plus, Cash App Green. And Cash App Green is essentially, hey, you need to spend a certain amount, spend $500 or more through Cash App Pay or Cash App Card, or deposit $300 more in qualifying paychecks. This is also what I mean by you can tell the type of customer that they are attracting by the, features that they end up rolling out. Deposit $300 or more a check or a month. Wow. Big spenders, SoFi's, in order to get SoFi Plus back in the day, was $5,000 a month. At least you're making 60 grand, So it does, lend itself to a different user. But with that user, it's not like I'm putting down, people that make less. But whenever you're running a financial institution, your pay is directly attributable, for the most part, to how many assets the person that you're dealing with actually has to offer you, because you get paid most of the time on a percentage of what you're dealing with. Percentage of the loan, percentage of the money being managed, percentage of the deposit, and how much that's saving you for the loans that you end up giving out later on. So for me, I do like the fact that SoFi lends itself to a higher end user. Cash App, however, I hope, continues to offer good products. I think that there's a lot of money to be made on the lower end of finance, but it's usually by ripping them off, which is terrible. Overdraft fees, additional card charges, having to pay to build credit. Hey, we'll charge you 0.75% if you want your check early. But most people will just say, hey, you know what? I've got money in my account already to pay all my bills. I don't need you to gouge my wages so that I can get my money early because I'm behind every week. So in that way, those people fall further and further behind because the companies that are working to help those lower class individuals take advantage of them. To a degree, I think, Cash App, even Chime, does make a lot of their money on that. But however, it's 95% better than the alternative, which is the large banks or the predatory money loans or these sort of things. So I actually do like those businesses and how they help with, they help people get their money right. But still, that part sucks. Because they don't have the assets under management to make the money that way, then they end up getting it through other ways. SoFi, by the way, still to this day, and it's been hurting the stock because of it, because they haven't been leaning into these predatory products. Like if we honestly look back at how SoFi has made their money, it's been so it's been really good, really honorable. The fact that they're one of probably the only fintech left that is not charging you to get early paychecks is crazy. You look to Dave, Cash App, Robinhood, Chime, all of them. They all charge so then you can get your money transferred quicker. SoFi still does not have a product that way. All right. Sorry, Tanner, I'm not bullish on Honor. In a way, I think for a bank, you can be. Because Nubank was a bank that really lent itself to being very honorable. Okay? You might not be bullish on Nubank, but let me just tell you a quick story. So in their terms of having a credit card, and they said, hey, you know what? You have to pay back by, the first of this month or whatever, or else we're going to charge you interest on those, on that credit card. And so not a part of the, statement of, or the agreement of that credit card, they sent out emails a week before those credit card statements were due. And they said, hey, just a reminder, you got to pay your credit card and have a nice day. There was 1 week where they didn't end up sending out that email, and they saw that their defaults on their credit cards had rose a lot in that week. This was really, really early on. I think like sub 1 million members for them. And they thought, oh, wow, this should be the new way that we run our business. We don't send emails. More people don't pay back their credit card. We make so much more interest. They made like millions of dollars. I think it was like the most profitable day that day. And David Velez, the CEO of Nubank, said, no, I mean, that kind of sucks, right? That's a little chintzy. Maybe we shouldn't do that. And so they said, all right, well, we will, say sorry to everyone. We didn't mean to not send the email. That was a mistake on our end. And we will refund you all of the money that was charged in interest this month. It was our bad. We didn't, you guys didn't pay your credit cards, but we are aware that you guys were starting to get used to our emails. So we'll take the hit on that. So they returned the money. With that, Nubank realized that those users ended up telling their friends, ended up, referring more people to those banks. And a lot of those users that got that refund that day became lifelong customers that do not look elsewhere for their banking. Nubank, by far, there's barely even a second place, has the such low churn, such low complaints for their bank versus other banks. And by them constantly fixating themselves on the customer experience and how people feel about their product, they have grown such an amazing brand that in turn makes a lot of money, but honest money. Okay? And I think that SoFi also wants that type of reputation. So while you might not be bullish on Honor, I think that customers really reward that type of behavior and that they will come back for more. So SoFi is taking the long road to build a truly, phenomenal reputation. They don't want to turn themselves there was a company before SoFi that could have been what SoFi is today, and that was Ally Bank. Ally Bank was the first real to scale one-stop shop fintech. And then they threw it all away because then they started to focus on profits over the customer experience, and those things fell away. So SoFi still has a very good reputation. They want to keep it that way. I was kidding, by the way. Yeah. You just didn't like my tirade. SoFi trades on getting your money right. Good to see they honor it. Yeah, I mean, it's not that I don't think that they shouldn't do more. Like, I think things like allowing customers to have prediction markets and these sort of things, I still think that means that you're honoring the customer. As long as you tell them, like, these are extremely risky. And, if two customers trade in this market, the total amount of money that's leaving this trade is less than it was whenever it started. Like, we have a cut. So I don't think that this means that they can't get into those types of products. What I think that it means is that you can't get into hidden fees. You can't charge people more for what they think is their own money, these sort of things. And yeah, I don't know if it means that they can't get into certain products. I just think that they shouldn't be shady with it. Hey Tanner, I tuned in to why Palantir is going down after hours despite beating expectations. I think that it's just about, the stock is a high price. As scary as it is. There might be the slightest sign that government growth year over year. I think last quarter it grew 53% quarter over quarter. This quarter it grew 51.5% quarter over quarter. Insane. Or sorry, year over year, but that was the next quarter. But that is decelerating growth. So if people know that that's how fast they can grow now, then they can model that out. But their total revenue, you just see like going up and to the right. It's hard to model out in the future how fast that growth is going to be. Are you going to model it at 60% or are they going to accelerate to 70%, 80% year over year? Will they be able to hold up this level of growth or will that decelerate back down into 40s, 30s, or 20s? So, this was an unreal quarter. I'm not taking anything away from Palantir, and I honestly think that based on these numbers, I expected the stock to go higher. But it's the most expensive stock in the market by far. Look at this growth rate, though. Like they had slowed all their growth down, which always happens with businesses. The larger size you get, the harder it is to grow year over year. And then they just said, you know what? We'll break that trend and we won't, we know it's harder to grow the larger you get, but we don't care at all. And we'll lower our head count and grow at the exact same time. And now we're at 63% year over year on a quarter that grew at 30%. Next quarter is going to be really hard because that quarter grew at 36%. Are you going to grow faster than 63%? And I'm pretty sure their guidance actually says that they will, which is nuts. Palantir is cheap. You need to get your eyes checked, brother. You need to go back to Finance 101. You got to read some of these books. And yeah. Buy Meta at the 375 level. Oh, yeah. I mean, I'd buy it at the $50 level. I think that's a good price too. Good luck getting it. It's like people whenever SoFi goes from $30 to $28 and they go, I'll see it back when it's at $15. You won't see it at $15. I'm not suggesting Palantir should be a $40 stock. But the difference between a stock that is, $222 or whatever it was trading in after hours, and for it to continuously climb to a higher and higher price, the multiple has to keep expanding. How long can you keep a price of price of sales of 100 plus times. You know? I sold Palantir at 112. I don't even think that that's that bad. I don't. Hindsight's 2020. You sold the most expensive stock at its most expensive valuation. I think you're all right. Okay. A fair valuation of Palantir with current numbers is $60, and we all know it. I don't know it. I don't even think that's true. I think at the time I thought that, but I also thought that this company might accelerate growth to 30+% year over year, which is insane. The best companies grow at 30+%. This quarter, on a year over year basis, they grew at 63%, at 134% net dollar retention. I am not a shareholder of Palantir. I'm not a buyer at these rates. But this is also, while being the most expensive company, is probably the best executed business I've also ever followed, behind Nvidia. And, you know, Tesla during the pandemic did extremely well. Nvidia's done extremely well, but they also got to a growth rate of like 270+%. And then what happened then? Growth decelerates. You can't just keep expanding growth. Okay, so this gets to 70%. Does it get to 80? Does it get to 90? Do we hold 90 for how many years? Like, at some point, growth decelerates. They're not going to be the only software company left in existence. I know a bunch of bulls want to believe it. It's not going to happen. Tesla couldn't hold the EV market. Nvidia couldn't hold the chip market. Microsoft couldn't hold their market. Google couldn't hold. Well, I mean, Google's done a pretty good job, but ChatGPT couldn't hold their market. There's never one winner, unless regulation comes in and dictates that there can be one winner. In that case, through, regulation. What's it called? I'm trying to think of someone please give me the term. Something capture. What is it called, please? Regulatory capture? Thank you. And also, I'm saying thank you to me. None of you guys wrote it. This guy wrote Nonopoly. Nasty guy. Okay. Palantir made $2 billion, is worth $500 billion. Yeah, but I think today it's dependent on the growth. A lot is being pulled forward because people very much believe that AI is the future. But like, look at this net dollar retention. This is the most disgusting chart I've ever seen in my life. Disgusting in a good way, sorry. Look at the percent change. This is also, this will get a little freaky. This is the percent change of net dollar retention year over year. So it was decreasing, and then it started to grow. It grew 4% year over year. Then 10% year over year. Then 11%. Then 11%. Then 12%. Then 13.5%. Their net dollar retention growth rate, which is not a statistic that anyone should track because it would never be accelerating, is accelerating. That's gross in a good way. Sorry. I shouldn't use these types of terms that are like, the opposite of what they actually mean. That's amazing. I've never seen anything like it. It's the most expensive company. I would not buy it. But they are quickly making up for the prices that they were at before. You know, I thought they looked expensive at 20, at 30, at 40, because they did at the time, because they were growing 13%, 18%. But now growing at 63% with a net retention rate of 134%, growing the fastest they've ever been, with good growth into 2025, with decelerating headcount for salesmen, and the average deal size per salesman is going up exponentially. Like, it's just incredible. Tanner, what's the reason Tom Lee won't just raise external capital to buy enough ETH at these deflated prices to hit his 5% target? Because the rate at which he can raise external capital is not worth it. If you end up selling, like, his stock is completely made up of Ethereum. Okay. So this is kind of weird. But let's say you got a bag of coins and you're saying, hey, I want to raise a bunch of capital. Oh, well, it should be something different than coins, because that doesn't make a lot of sense. I've got a bunch of cheeseburgers and I want those cheeseburgers. You're telling me to sell cheeseburgers, to go buy cheeseburgers, to do what? Like, you're going to end up with the same amount of cheeseburgers. It's been a long day. I need to retire, man. How did I get here? Yeah, bye, guys. Seriously. Oh my gosh. I would leave too. But you're giving up something to go buy the same thing that you're selling to go buy the thing. You know? I'm going to go sell my 2019 Honda because I'm going to raise capital to go buy a 2019 Honda with the same amount of miles on it. What? So the only way that works is if you have a higher, you could sell the price of whatever you have at a higher sticker price than the next one that you're going to go buy, because then that would be additive to your book value. But Tom Lee does not have a big multiple on BMNR to do that. So that's a little high, or a little hard. Yeah, but if the cheeseburgers are at a 1 times MNAV, you can't sell them to buy additional cheeseburgers. You'd get the exact same amount. And if they're at negative 1 times MNAV, then you would actually be selling cheeseburgers to get less than what you had originally. That's not good. Every time you sell a cheeseburger, you buy one that's already been bitten into. I don't even know what the multiple is because I haven't ran the numbers this week. This Monday's been busy. I am, guys. I'm sorry. Drew Stan here is right. I need to take a cold shower or something. But if they can attract more investors, which clearly they're not doing right now because the stock price is falling, if they can end up increasing the multiple of the stock, then they can end up getting more Ethereum than what they had originally. Okay. I'll gladly pay you Tuesday for a hamburger today. I know that reference, my friend. You did age yourself, but I'm with you. Have you talked about Meta yet? In the most small stance, I think that this is going to be the opportunity that I end up selling stock to go buy Meta as it falls. I'll trim other positions because I'm a cashless man. And buy Meta because it's really, it's getting cheaper. It looks to be the cheapest name in the Mag 7. I don't like that. I don't think that they have the worst performance. I don't think that it means that I think Google's worse or Amazon's worse. I think they're both doing great. Apple actually just announced that Siri, or they're for Siri, they end up partnering with Google to help with their next Siri thing. So that rumor is looking more and more true by the day. So yeah, that's quite exciting. So that makes me even more bullish on Google. Google's such an amazing turnaround play. People forgot how good they were. People forgot how good Amazon was. And I think people are forgetting how good Mark Zuckerberg is. Call him a lizard person. Sweet baby Ray's freak. Whatever you got to say. But he knows how to turn a profit. Okay. Let's listen to the great and powerful Jensen Huang talk about the state of Nvidia. There's nothing on my screen. Good. Now, I've been doing this for too long to throw nothing up on the screen, but there's something there now. Sorry, guys. Let's listen.
Founder of Nvidia, Jensen Huang. Jensen, congratulations to you. What a moment in time. $5 trillion in market value. How are you feeling?
Well, it's a great honor. It's a great achievement. It took us 30 years to reinvent computing and started this complete AI platform shift. And now the industry is off on a decade-long build-out. And so really excited with the achievement.
Tell me about manufacturing this Blackwell chip in Arizona, Jensen. How difficult was that to achieve, to bring such an important chip production here to America?
Well, first of all, AI is an industrial revolution. And this is the most important technology of our time, potentially the most important technology of all time. And when President Trump first took office, he wanted us to manufacture these critical technologies onshore. He wanted to reindustrialize the United States. He wants to have energy growth. He wants to make sure that the United States is a leader in artificial intelligence. And in order to do so, we need to lead in energy. We need to lead in chips. We need to lead in building AI infrastructures and factories, including lead in building AI models, of course, but also using AI in all the different applications in various industries, from healthcare to manufacturing to robotics to, science and industry. So he wanted that in his administration, and he wanted it at the speed of light. And so I told him that we would bring manufacturing back within 9 months with the partnership of TSMC, which is an incredible partner for the United States. Foxconn, Wistron, Amkor, and Spill, we've been able to manufacture now the most advanced AI chip in the world completely in the United States and Arizona. The workers worked incredibly hard. The mechanical engineers, the electricians, the plumbers, the construction workers, they all worked around the clock. 9 months later, we're now in volume production of the most advanced AI chip in the world.
Is it much more expensive to do it in the United States versus Taiwan?
It is more expensive to do it in the United States, but we're going to get better over time. Re-onshoring manufacturing and the first plant of its kind, it's going to cost a little bit more money, but that's okay. The national security benefits, the supply chain resilience benefits, the job creation benefits here in the United States. We're going to manufacture chips, systems, and those systems are going. These AI supercomputers are going to go into what are going to be AI factories, which are going to be used by every single industry in the United States. And so this is going to create over time. My guess is millions of jobs, and really, really high quality jobs. From really skilled tradecraft. And so I think this is just such an important thing to do. It costs money to make the investment to bring it here, but over time it's going to pay for itself and more.
Well, this is an economic story, but this is also a national security story, Jensen. So talk to us about that a bit and why it was important for you to answer the call from President Trump because of national security issues.
Well, President Trump's argument was simply that we can't afford to have the critical manufacturing of things that are technologies and products that are so important to national security be manufactured around the world and can't be manufactured here. And I think that argument is sound. It makes perfect sense. And we decided that we would go all in on bringing manufacturing back on shore. And so I think this is it's great for jobs. It's great for national security. It's great for supply chain resilience. It's great for our business. It's great for America. I think everybody wins. It's terrific. It's such a great vision. The three things that he did that is really important to our industry, really important to America. Number one is reindustrialization, energy growth, and then also taking a leadership position in artificial intelligence, the most important technology of our time. And so these three initiatives that we're part of is going to completely transform America's position in the world and going to continue to keep America well ahead of the rest of the world. And so it's such a great vision, and I'm all behind it.
That is very optimistic. Jensen, I want to take a short break, but when we come back, I want to ask you a little about this deal that the president has agreed upon with Xi Jinping, what that means for Nvidia.
Let me go ahead and find... Okay.
And I am back with Nvidia's CEO and co-founder. Ask you your which was done this past week in South Korea. The president said he will cut the tariffs to 47%. He will put that 100% tariff threat on the side. China will suspend the global implementation of the expansive new export controls on rare earth minerals. And also, the U.S. will suspend a new rule that expands the entity list export restrictions to any entity that is at least 50% owned by one or more entities on the list. China will suspend the implementation of relevant export controls. What does this agreement mean for you and Nvidia with regard to selling to China?
Well, what an achievement. This is a milestone meeting, a milestone deal, a historic deal. And the readouts from all the news that I've read, just the respectful, the friendly relationship that they've built between the two presidents and, of course, between the two countries, therefore. The post from Secretary Hegseth and all the readouts from Secretary Bessent have all been extraordinary. You know, this really creates the conditions, I hope, for Nvidia to be able to go back and compete in market in China. Trump 45, in President Trump's first administration, he set the tone perfectly for America to lead in technology and make sure that American companies have the best and first, but for American technology companies to go around the world to compete and win. In the last 4 years, the administration really set us on a path that really backfired. The policies have really backfired. From a 95% market share in the China market, which is one of the most important markets in the world, when President Trump left office, Nvidia's market share in China is now 0%. And so this is really time, and it's a great opportunity for us to reset back to the Trump 45 policies. For the Trump 45 policies where American AI companies are able to go to China, compete in the marketplace, and be able to diffuse and proliferate American technology standards around the world so that we could set the global standards, so that the world is built on American standards, so that we could lead the world. And so I think this creates the conditions for us to do that. I hope we're able to revert back to the policies of the Trump 45 administration and get back into the market and compete.
Do you worry that?
I completely agree with what he said, by the way. The policy that went in by Trump, so he didn't glaze him on that specific part. You know, that policy was terrible. It killed Nvidia and forced China to find alternatives. A lot of you guys in chat, people that will not name themselves, you'll hide behind your anonymity, said I was wrong. And that they were going to need us. And that China was many years behind and that they'll never catch up because they do not have, you know, the relationships with ASML or Nvidia or AMD or any of these companies. It wasn't true. Necessity is the mother of invention. You think they're going to roll over and die if they don't have NVIDIA's AI chips? No. They're going to find a way to manufacture those chips on their own. You know, if there's something that like the Chinese economy has been able to do over and over and over is get really good at manufacturing. Like solar, EVs, chips. They're pretty good at it. All right.
Your chips in any way will give China an edge in this AI race?
Well, one of the things that the policies that we've seen in the last 4 years is that we've done nothing to set them back. In fact, what we really have done is conceded and retreated from the second largest technology market in the world. And President Trump sees that. And it's also true that we underestimated China's ability to accelerate their indigenous technology industry. They manufacture now millions of AI chips. It is very clear now their military doesn't rely on American technology. In fact, we've been banned from returning back to the Chinese market by the Chinese. And so I think it's very clear they don't rely on American technology. It's also common sense that the military of China, with all of their local capabilities and their local chips, wouldn't rely on American technology and American software for their military applications. I think that's all. It makes perfect sense, and I think it's played out now that the policies of the last 4 years has really backfired, and it's time for us to revert back to Trump 45 policies.
I want to ask you about the trillions of dollars you're expecting.
Nah, I'm over it. If you guys want to hear about that, though, I'll have a video coming out tomorrow morning on NVIDIA's position right now, as I think that they, over the next little bit, will become a $10 trillion business, and why I continue to have, you know, most of my eggs in that basket. If China invests a lot in power, which they can do with central planning, which, by the way, it's not if they're going to do, that's what they've been doing. That's their large investments. You know, they've been heavily getting into power, or energy, as I should say. I forget the exact number, but the amount of nuclear plants that have started in the last decade in China versus the United States is like 100x difference, if not more. Okay, let's see. Yeah, they own the batteries market. Yeah, it's so true. Honestly, I would never count out China. And that's why whenever we do have a lead, which is in big tech, I just hope that no one ever messes with it. Like, please. So Nvidia, through the advantage that American entrepreneurship has had, has led them to a 95% market. It was the state of bad politics that ended up them losing that. This is why I always said, like picking stocks, if you have a tailwind from the government, that's the best thing that you can ask for. If you ever have a headwind, it's one of the things that you just can't fight against. If Trump says to Tesla, hey, we're no longer going to support the payments of your new cars, like, I'm so surprised that the stock is still holding up this high, because, like, guys, the sales is going to be very different. I'll never, ever fight against government headwinds versus tailwinds. It might be the largest shift change of a company. Like look at the EV or the solar market. Before and after Trump got in, it was like, oh, you know, what was the name of the company with the microinverters? Enphase was a Wall Street darling. Trump got into office. It got removed from the S&P 500. It's done terrible. I think it's down like 80+%. I could be completely off on that. But like, here, let's see where it was from. It went from 339. Yeah, it's down 91%. 91%. I'm not saying it's not underpriced or something at this point, but I never fight government headwind. Ever. That's a losing battle every time. I would do that Tesla to Meta any day. Do you mean trade from sell Tesla and buy Meta? Look, I will say this. You can interpret what you want. I had Tesla. I no longer have Tesla. And I didn't have Meta. And now I do have Meta. I'm not telling you what to do. But for me, I have gone more bearish on one name and more bullish on another. Tanner reminds me of that kid with the glasses in the Christmas Story. I dealt with this for 25 years. Okay. I thought this was a safe space. This disgusting act of violence, saying that I look like that kid. You should be ashamed of yourself. Let's move on. No one even referenced that kid's name. Also, no one ever knows the kid's name. They always just say the kid from the Christmas Story. Why do they always say that? What's the kid's name? Dude, I legitimately stop. Everyone says this to me. You're going to shoot your eye out. Enough. Call me Tannerella or Toilet Tanner or those more derogatory names. Honestly, they're easier for me. Ralphie. Yeah, it is Ralphie. Lori. Yeah, I'm fine with that one. Okay. That kid is sick, though. Honestly, I haven't seen it, so maybe he's dope. But, yeah. Tanner the timid pooper. I'll take that one. You guys always do this. You always go rat like he's my bigger brother, like the godfather of finance streaming. You're like, well, Tanner does that. He's like, people will be like, or he'll be like, I don't like people that sell a course, and then everyone goes, Tanner sells a course. You go ask him your opinion of what he thinks about my course. Okay, stop grouping me into a bunch of scammers. You guys don't like my course, you can have your money back. Okay. You guys always go rat to emit. Tanner yells at his audience. Shut up. You still own Chime? I just bought a bunch today. Yeah, Steve is quickly becoming the godfather of streaming and finance. He's great. I'm telling him it tonight. I'll be on his stream. That's so funny. Okay, let's see. Doesn't Okay, John, that's funny. That's funny. It's just people that prefer to stay anonymous on X. I don't know. If he doesn't want me to show his stuff, I won't show his stuff. Tanner, have you tried contacts? No, I actually like my glasses, funnily enough. I don't want to stick stuff in my eyes. The glasses, I rarely even know that they're here. Got zero problems with it. We're not streaming Uber's earnings. I will definitely follow Uber's earnings tomorrow, but I want to follow Shopify. It's my second largest position. If you guys see it have a bad earnings, if we end up selling off a little bit, you're just going to know I'm going to have a bad day all day. So that's one thing. But yeah. Mitt finally sold Grab. That can't be true. Did he sell Grab? I'm texting him right now to see if you guys are liars. Or am I being baited? Okay. He's calling me. Oh, no, brother. You definitely sold.
No, I don't. Dude, I think because I didn't go live for the earnings, everyone's just like spamming in your chat about Grab. But
That's.
no, I did not sell anything.
I asked you if you sold, and then I got replied with a call. I definitely thought you were going to go. All right. Well, how was earnings?
Dude, I have. First of all, I publicly disclose on my Substack, on my deep dive. I have over 40,000 shares. So no, I did not sell. And in fact, I bought another couple thousand shares in my other account because Robin and Liz, we have separate accounts. There's one account where I have 25 grand in it, so I bought another 4,000 shares at 597 today. But no, earnings were really good. I mean, I'm going to talk about it a lot tomorrow on the market open. It's just, dude, we experienced this with Palantir, dude. Like, people are crazy about stock price action, and I get it because I'm one of those people. But like, Palantir went from 210 to 198, and people are crying. Grabs at 603 from 624, people are crying, not knowing that there's not a lot of volume that comes in after hours because it's Grab, it's not Nvidia. And second of all, I mean, I don't think people are willing to even wait 24 hours to see what happens tomorrow in terms of the price action. So I don't even think people care about the earnings. You could say whatever you want about the earnings. People just care about the stocks not going up. And so it is what it is. But no, I thought the earnings were incredible. I just finished listening to the call, and there's a lot of stuff to share that I'll talk about tomorrow. But I think the call was great. And I think the earnings were great. It's just the stock is flat.
Yeah, all right. All right. By the way, I saw Palantir's earnings. Congratulations. I don't care what the stock is doing. Those are some of the greatest numbers I've ever seen in 10 years of investing.
Well, me too.
But behind Nvidia.
Yeah, but it's just like the company's bigger than Netflix. So it's like when people want it to, do people want it to be bigger than JP Morgan tomorrow? And it's just like, I don't know how much caution one can provide people before earnings about, hey, the stock is expensive and they could produce the best results ever, but that doesn't mean the price has to move higher. But a lot of people don't care. And I think most of the people that have been investing in Palantir for years, they were so impressed and they don't give a shit about the stock being down 4 or 5%. But the traders that came in today at 201, 203, expecting it to go to 220, they're pissed off. And they're the ones that are the most vocal in the YouTube chat about how annoyed they are with the price action. Same thing with SoFi, right? If you bought it at 30 right before earnings and then it goes to 28, you get upset. But you bought it at 7, so you could give a shit because you know that the company keeps executing.
Hey, I also bought at 31. All right.
Yeah, you also bought at 31 as well.
Yeah.
But one thing I will say about Grab, and this is something people didn't catch today, 420,000 calls were traded today. Someone bought, or I don't know if someone bought, but the 650 November 21st call had 100,000 in volume today, and a lot of it happened near the end of the day. So I would give it a couple days before people just think, it's a flat reaction. Yeah, 420,000 calls, 30,000 puts. That's a ridiculous put-call volume ratio. Obviously, there's some part of the market, whether it's a retail whale or whether it's institution that's expecting a move above 650. There's another 100,000 calls on the $6 call for January and April. So I think we're going to see over the coming days. But no, I thought the quarter was incredible, and everything is going up and to the right, which is what I care about.
All right, that's fair. No, I appreciate this update, and don't worry, I'm going to ban everyone that said that you sold. So,
oh no, people are saying I sold because they're like, "Oh, the stock's down, so Amit have to sell because Amit caused the stock to go down." It's like,
no, I'm more making a joke because a bunch of people are like, Amit said that you yell at your audience, or Amit said that he doesn't like that you yell at your audience. I was like, I don't give a fuck. I'm going to ban you now. So,
no, hold on. First of all, what I said is I don't like when creators talk down to their audience and then someone says, but Tanner yells at us. And I was like, yes, but when Tanner does it, it's funny because no one really takes him seriously because he's like this angry little old man yelling at the crowd. But like, it's like charismatic when you do it. But then there's others creators who like actually like treat their audience like shit, which is not what you do. So.
You need to live a day in my shoes. They all call me Lori and Tannerella. I got the kid from the Christmas Story today. I love what I do, but it's chipping away at me here.
Bro, the kid from the Christmas Story? Oh my, that's a new one. Oh, I just looked it up. Oh my goodness, that's you. Oh my goodness, that is you. I saw this movie it had to be 10, 15 years ago. It's been a minute.
Yeah, okay. No, I appreciate you adding on. This is great. All right, well, yeah, no, it was good to talk with you, Amit. Yeah, okay, goodbye. Jesus Christ. This is what I deal with. I'm talking to a friend here, trying to get some help. And he goes, oh, wow, no, they're so right that it's you. What the? Anyway, I'll call him back. We're talking at 9:30. Okay. It's not okay. Let me look. Boy from Christmas Story. A Christmas Story. Okay, bro. Whatever. Yeah, I know, right? I was gonna say, I was like, you haven't seen this movie. Jamie, but I need a Jamie. It takes me too long to Google. Okay. Real quick, how long do you guys think it's going to take Google to actually end up putting out an Atlas-like product where Gemini is overseeing your internet searches? And would you even let it do that? You know? While you guys are typing that in, let's go to a quick SoFi thing. This was from the creator of Lightspark, which was a recent partner. I did watch it years ago, and you look like that guy. It's like a 6-year-old child. You guys are saying that I look like a little child. This is why I grow the mustache out. All right. By the way, he definitely has not seen, not even that movie, a movie. You didn't see a movie. Okay. Let's look at this quick demonstration of the SoFi payments for that actually flow through the Bitcoin network. So I don't know if there's sound on this. I assume not. End up going, should have been SoFi Plus member to get the real experience here, but anyway. Goes to pay manual, Rubio here. And there was something actually in the description of this tweet where he actually talks about this long buffer and the reason for that buffer. But yeah. Anyway, goes to send him $1.25, which usually you would not be able to do because that low payment, like the flat fee charges to send that via PayPal or, Western Union or something like this would just be so incredibly high. However, here you pay a 1 cent processing fee and you'll total pay $1.26. How crazy is that? He's going to pay 1 cent to send $1.25. Okay, so he needed to fully look at all the he needed to look at all of the processing fees and agreements before you could even send. So there's no excuse saying, oh, I didn't know, or something like this. Send the payment, done. No 10-minute long Bitcoin-based, processing time or anything along those lines. Just, immediate payments. Now, he also said, in case you're wondering what the lag is between the beneficiary selection and the next screen and the step before the final fee schedule is shown, it's all the off-band communication between the sending and receiving banks for FX and compliance powered by UMA standard. Okay. Jared, thanks for the buck. Okay, so what does Amit look like? I don't know. And even if I did know somebody that he looked like, I don't even think I'm allowed to say it. I don't think white people are allowed to tell brown people what they look like. It's a one-way street. Amit can tell me anything of what I look like. But yeah, I don't know. He's a handsome fella, I guess. Okay. Can we agree Meta is ridiculously cheap? No, because the market's selling it off. This is what makes a market. We can't agree. We definitely cannot agree. He's yelling again. Ladies and gentlemen, I think that's my cue. Really do appreciate your time. I'll be back at 9:30. We'll be joined by Amit and Roy, the co-hosts of the Tech Bros weekly podcast, which is essentially a podcast about Robinhood. And this week, we're going to be doing our predictions. If you guys want those updates on those streams, make sure you subscribe. Maybe hit the notification bell. That way you guys know every single time that I'm live. But until next time, bye for now.